Group 5 has posted a 26% improvement in its headline earnings per share. That's for the financial year to the end of June. The Chief Executive, Mike Upton, is with us in studio, and he's handed me a copy of the annual report. Now, this is only 6 weeks after the year end, and Group 5 can produce an annual report. Some companies take 6 months. It is quite an it tells us a lot about on the one hand, the organization, the efficiency of the organization, but on the other hand, on the efficiency of your accounting function and your auditors, Mike.
Both of those, and thank you very much. It is quite a stretch, of course, but I think it's also a commitment that the whole organization makes. You know, it actually teaches us to write down what we've done and what we're going to do quite quickly after the results. So I think it's a good sort of discipline to have. It takes lots of late hours, but it's done.
And well done on that. And no doubt, when you've got good results like you have this year, it makes it a bit easier.
It's always easier to have some reasonable results, I'd say. Thank you.
But I was looking through the first and second half, and you did seem to slow down somewhat in the second half.
We had a few issues to deal with in the second half, which were perhaps quite anticipated in the first half. You know, one is that that large project in the DRC, which unwound a little bit in terms of our civil engineering business. You know, that's now over, and we can move on from there. That did actually really undermine a little bit what otherwise would have been a very good H2 result. We had hoped that our civil engineering business would have been a 4% business in the second half, but it was actually a 2% business. So that's what really was the underlying issue. We had hoped that our civil engineering business in H2 would have come back to within the sort of range which you'd guided, which was a 4% business.
4% profit margin.
As in a margin, and it actually came in at 2, so
half of that.
Very mediocre results, and some lessons learned, as we say. But we move on.
Africa, no doubt, seems as though it's a tough balancing the risks and the rewards there, because you do have future plans in countries like Zimbabwe.
We do. Africa has been very good for Group 5. We made good money there. We make generally good margins there too. But obviously, this was a little bit of a bridge too far for one of the businesses. It was a big project, long way from home. So those are the lessons learned. But our sort of outlook is that we need to grow more African business. We're sitting in sort of 18 or 19 different countries now, not all at the same time, and we've made good money, and we have great ambitions, for all of those actually.
But it's interesting because the construction companies have had a mixed bag out of Africa. It's almost like the banks lending money on their credit cards. You go in, do well, then have a disaster, withdraw, go back in. What's the Group 5 experience been?
We've been, going back 10, 15 years probably, we also had some bad experiences, but we stayed where others came home. And, we've learned how to work there. I mean, our projects business, even our housing business, our buildings business, our civils guys, they all have done quite well in Africa mostly. And, I think the point also was that Africa is becoming a market for us as opposed to a project opportunity. So we need to embed ourselves more in those countries, and that's going to also mitigate risk if you're there all the time, as opposed to arriving and leaving. That's the point.
Is it a business-friendly environment?
There's not one answer. It's a continent of 53 sort of countries. So you need to choose carefully, and we have a fairly robust risk environment actually in terms of our process with the board. So there are some no-go areas, and there are some areas which are actually easier to work in even than at home. So we need to choose them carefully. That's the sort of sovereign side. Then you need to look at the actual sort of project itself. Who are the counterparties? What's the logistics of the project, and all those sorts of things. So we do quite a thorough job before we go anywhere.
What about Nigeria? I ask this because the reports I got back from the Washington gathering of African countries in America was that we in South Africa were very noticeable by our absence, almost, whereas Nigeria were the stars of the show. Are you having much success there with this business-friendly approach?
We've been in Nigeria now for about 7 or 8 years at a project level. So we've done 2 power plants there, and we've actually done a project management job for a real estate sort of project in Abuja. We see great opportunity in Nigeria. We take much more sort of caution with Nigeria because it's a very robust environment, a lot less defined than perhaps Ghana or other parts of Africa. So a more sort of cautious approach to Nigeria. It's a market you can't ignore, particularly for infrastructure. So we need to find a way to be there. in terms of our risk environment there, of course, as well.
Market you can't ignore. Mike, thank you so much for joining us. Unfortunately, we have run out of time, but that was Mike Upton, Chief Executive of Group 5.